What's going on, all of my Sofi hodlers? Welcome back to the channel. It was a positive day by 3.29%. Why is this such a good sign? I want to talk about that here in this video. Go over the short interest, go over everything that you need to know. So stay calm. We are going to make massive amounts of money in due time. I hope you guys are taking the opportunity to buy the dip and you're feeling very excited about your investment. I don't know what just happened right there, but let's get into this video. Hit the like button for me, subscribe to the channel, and make sure to comment down below what is your thoughts coming on earnings March 1st, as well as what is your thoughts about a short squeeze, what is your thoughts about a price target in 5 years. Let me know that information. So without any further ado, let's get into this video. Sofi was up 34 pennies or cents, whatever you want to call it, 3.29%. That is very positive because despite all of the fear that we've seen this week, we are seeing people that are willing to buy Sofi over the weekend. And as we know, a lot can develop over a weekend. And that, simply put, is why today was such a big sign. That does not mean we couldn't be down 10% on Monday, but it goes to show that there's a lot of relative strength among Sofi investors that are buying the stock at these prices. We will come back to the technical analysis because it is very encouraging what I am seeing, but I do want to go over the geopolitical events that are happening. Why? Because it affects your investment. So if you are not staying up to date with this information, you are losing out on a chance to make a lot of money, whether you trade options like I do, or you just buy stock and hold them for the long term. Now, it says Putin and Lavrov will also have a travel ban as well as economic sanctions by the US. So you're actually seeing them sanction Putin. About damn time we actually did something about it. We were kind of all, bark, no bite, and we still haven't done enough. But nevertheless, we'll take what we can get, But President Vladimir Zelensky has asked Israel's prime minister to mediate negotiations between Ukraine and Russia. So that could also be a very good sign. Why? If there is some kind of peace agreement, it would show that, hey, Ukraine is not under full Russia control, especially if Vladimir Zelensky can remain in his position, then that's going to show, hey, we're maybe not heading towards World War III or another Cold War. Maybe we can actually find a diplomatic solution here, and the markets would rally off of that if these negotiations are actually serious. If the fighting keeps happening while these negotiations are going on, it wouldn't mean all too much. So keep that in mind. Be optimistic but cautious at the same time. It says UK bans Russian private planes from its airspace. The UK is doing a phenomenal job with this. They are essentially leading the free world here instead of what we've been doing. But Biden says, I've ordered more troops to NATO territories. Russia, I mean, they know we're not playing at this point, but Ukraine is also making some good moves as well. They're doing a lot. Russian troops have stopped near the northeast city of Konotop after suffering heavy losses during a fight, Ukraine's land forces said. Definitely a good thing. I don't like bullies at all, so I am definitely rooting for the underdog here. I'm going to go ahead and retweet that one. But it says the EU could exclude Russia from SWIFT on another round of sanctions. That could be a potentially very negative catalyst for the markets if Russia is barred from SWIFT. And SWIFT, if you guys don't know, it is essentially, imagine if you had $1 billion in Russia and you wanted to wire transfer that $1 billion to an American account or a Chinese account, Australia, UK, Germany, Poland, anywhere else. You need to do that using the SWIFT network. That is the major, money transferring network that all countries use. And that would essentially hurt the citizens as well. And it would definitely slow down Russia's economy even more. And specifically, we know the markets care about SWIFT a lot because when Biden was giving us statements, he never mentioned SWIFT, and the markets started to rally because of that. If he would have said, yeah, we're shutting down SWIFT, the markets would have tanked on that. Because, it's very obvious here. The markets know that America is being very weak on Russia, and they have been rallying because of that. If we went balls to the walls, for lack of a better word, and sanctioned everything and shut down their economy, the markets wouldn't like that as much. The markets, they never lie. Well, sometimes, but not in this scenario. Now, as far as the data that you guys need to know, what is very important as well is to pay attention to the Fed rate monitor tool. What will you guys notice from this? Take a look at the last video. The probability of a 0.5% rate hike was only 20.1%. Now, well, over the past week, it was 18%. Now it's sitting at 22.1%. The 0.25% probability is sitting at 77.9%. And you can see that every day, the probability for a 0.5% rate hike, when it goes up, the Dow tends to do a lot better than the NASDAQ. And the Dow was up about 2.5% today. The NASDAQ was up 1.64%. So a whole percentage point better the Dow did than the NASDAQ. And that is because the Fed rate hike expectations. And that also does affect SoFi. The higher these expectations go for a more hawkish Fed, for a Fed that comes down and hawks down on the economy and takes liquidity out of the system, raises the federal funds rate, the borrowing rate for people and for citizens, for businesses, that affects SoFi because it will create less demand. There will be less loans going on, less home loans, less auto loans, everything. Imagine if the federal funds rate went to 5% again, like in 2005 through 2008. If there wasn't all that corruption going on back then, there would have been a lot less borrowing. So if that were to happen now, you'd see a lot less demand. But obviously, it doesn't look like that is going to happen. 2% by the end of the year looks like the most likely outcome of all of that. But still, nevertheless, pay attention to that. And to reiterate yet again, investing.com/Fed rate monitor tool. Sometimes they will lag. Sometimes if you see this spike and the 0.5% probabilities go up, the markets, they will follow that. So you can actually make a lot of money trading, paying attention to this. So that's that. As far as the short interest of free float, you are looking at 21.23%. Current shares that are sold short of 131.23 million. Cost to borrow max of 2.32% and a share utilization of 100%. Now, the cost to borrow is sitting at 2.32%. Utilization is at 100%. If you guys are unaware of what utilization means, it means if, say, this is at 100 right now, then there is no available shares to borrow to then sell short. Now, the cost to borrow is important when you're looking at the utilization, because if the cost to borrow keeps going up and the utilization stays at 100, that means that short sellers or people that are lending out their stock potentially to short sellers, they don't want to lend out the stock for 2.32% because they think it will go higher than that. Why would you do that if you could hold on to your stock and it would go up more than your cost to borrow rate, right? The interest rate you would get paid on your short position. So if this cost to borrow number say goes to 5 or 10% and the utilization stays the same, that's a very, very bullish sign. So I will pay very close attention to that and keep you guys updated on that. That's why you want to hit the subscribe button so you can stay up to date with all of this information. Days to cover is sitting at 3.01. So that is also going up. And days to cover means how long would it take for shorts to cover on their short position. And it says current 3.01 days. So it's very hard for shorts to get out of their short positions if we do see a bullish reaction upon earnings, which we likely will, as we have went over the SoFi search trends. We pull up Google Trends. I have not looked at this, but I would imagine it's still elevated since the Super Bowl. They've probably gained quite a bit of customers over that time. As you guys can see this right here, everybody was looking up SoFi. They probably had no idea what SoFi was, and they're like, hey, I can get a credit card. I can invest with them. I can get auto insurance, home insurance. I could bundle them. You get what I'm saying. Very dramatic there. But nevertheless, it is going to do well for SoFi getting all of that attention. And I think you're going to get some good guidance coming out on earnings. You're going to get good numbers, and people might actually start to respect SoFi a little bit more. And better yet, if SoFi could say, hey, we could be free cash flow positive by the end of this year or the first quarter of 2023 or something along those lines, the stock would likely rally off of that. So all fine, all is good there. Just keep in mind, what I'm saying, I think right now is a good time to buy more SoFi, and that's exactly what I have been doing. As far as the technical analysis for SoFi, the biggest thing I want to point out is that $10 support level. Look at that. Today we opened up at about 10.50, fell all the way down to $9.97, but you see a lot of demand under $10 per share. People think that is a no-brainer choice to buy the stock at these prices. They buy the stock and send it right back up. So you're going to need to see a lot more fear in the markets to substantially push us under $10 and keep us under $10. You guys can see all of the support in this range. Even yesterday, where we hit $8.82, rebounded all the way back up to about $10.70 per share. It's looking very bullish. Volume has remained high as well. And if we do take a look at this, we see the option order flows for the day was 83% bullish. Over the past week, 69% bullish. You're not seeing these numbers virtually on any other stock that I look at. So that is very encouraging, and I hope you guys are encouraged, because institutional investors, they're buying options that could potentially expire worthless on SoFi in massive amounts. And as you do know, options, about 83% of them do ultimately expire worthless. So when you're seeing a lot of this positive order flow every day, definitely a good sign. Let's go ahead and pull up the MACD and see what that is telling us. And we can see right here that it is slightly bearish, but you're not really seeing it telltale to a certain direction. You're not really seeing it widen. You're kind of seeing it starting to close up just a little bit, and that is bullish when this yellow line is above the blue line, like right here. It's bearish when it's right here and it's under this blue line. As far as the Bollinger Bands, we could see that that level we have to break out above is sitting at $11.81 per share. If we get good earnings, I don't think it'll be hard at all to break out above that. And then that big level at $14 per share, that's going to be the real test, and that's going to be the real resistance level. So that is all you guys need to know from this video. I will keep you guys updated over the weekend what is going on with the geopolitical tensions, what is coming next for SoFi stock. Hit the like button for me, subscribe to the channel, and comment down below. Let me know your thoughts on this whole entire video. Thank you for watching, and I'll see you in the next one.